All right, one of the first terms that I want to go ahead and go over with you guys is the original creditor. A lot of people will call me up and they'll say, do you have any Visa accounts? Do you have any payday loan accounts? And I'll say, sure, I got a few. What are you looking for? And then they get stumped. So I want to go over this term called the original creditor. The original creditor is the original creditor or financial institution, bank or lending institution that either approved the loan, extended the line of credit, or offered a revolving line of credit. Just to go ahead and name a few original creditors: Capital One, Chase, Washington Mutual, Wachovia. The banks that actually lend the money is considered the original creditor behind the account. Purchased principal face value. Now, people call me up all the time, and I get calls and people say, how much is it per account? Can you sell me a debt lead for $5 an account? Well, the thing is I don't sell my debt based on the account. The debt is sold off of the principal or the face value of the debt. The purchased principal of a debt portfolio is typically the amount of charged off debt by the original creditor. This is the amount that is used to calculate the purchase price of a portfolio. So if I end up having 1,000 accounts, all 1,000 of those accounts have a charged off amount of, let's just go ahead and use a really generic number, okay? Let's say $500. So we have 1,000 accounts charged off at $500 each. What we have is $500,000 in face value. That's how much principal is in that portfolio. Okay, we don't go ahead and purchase debt according to an account. We purchase debt according to the amount of debt in the portfolio. Now, in my example, it was very plain, very basic. Every account had the same amount of face value, but that's generally never going to be the case. All right, debt portfolios are very random. The principal amount is dependent upon what the line of credit was, how much was charged on that line of credit, and how many months it went without a payment. Because the more months you go without a payment, the more non-payment fees you're going to have assessed towards the account. In addition to that, if it's over the limit, you'll also have an over the limit fee assessed to the account, plus a fee and interest rate. Now, all of that is part of the principal or the face value. Once that account is charged off, that is the amount that you buy or sell debt by, the charged off balance. So pay attention when you're buying a portfolio. You don't want to look at a charged off balance of $500 and then have another $120 in post charge off interest and then have a balance of $620. And don't let somebody try to sell you a balance for $620 when the original charged off amount is only $500. So that's why I took a second to kind of go into that, because I've seen that a couple times. So pay attention to detail when reviewing a portfolio. Avoid buying added fees and interest in the balance. If the seller is insisting that you buy fees and interest, calculate that into the current balance. Offer a lower purchase price. That way, you're tipping the scales. That way, it's making it fair for all parties involved. If the seller is insisting that you purchase based on principal plus interest and fees, say, okay, you're offering me 2 cents on the dollar. Well, I'll offer you 1.8 cents on the dollar to make up for it. If you just can go ahead and just tip the scales a little bit in your favor everywhere you can, you might be able to make out on top. Now, here are a couple terms that I definitely, if you're new to the industry, you need to understand. The charge-off date is the date that the original creditor closed the account and has written the account off as a loss. A creditor may put an account in collections before it's charged off. This is an attempt to cure the debt or bring the account current. So there are cases that collection activity will happen prior to the charge-off date of the account. A creditor may even perform collections on the account after the account has been charged off. All of this is good information to find out. The key to buying a debt portfolio is asking questions. You want to ask as many questions as possible. You want to see the person selling the portfolio has those answers. You want to make sure that they know what product they're selling you. So when speaking with someone about a debt portfolio, don't be afraid to ask as many questions as possible. The charge-off date is not the statute of limitation date. All right. The statute of limitation date is the time that the creditor or the current owner has to file a lawsuit to get the money back from the debtor. Even though the statute of limitations is dependent upon the state, most debtors aren't aware of what the statute is. I know here locally in Florida, we have two statute of limitation dates. We have an oral and we have a written. It's important to pay attention to make sure you know what the statute date is in each state. In Florida, the oral is if somebody calls me on the phone and they offer me a credit account as a marketing over the phone, and I say, yes, I just entered into an oral contract. If they send me something in the mail, I put down my information, I put my signature to it, I send it back in the mail, they send me a Visa card, I just entered into a written contract. So it's important to know the difference between the two, and also pay attention that you might have a couple of variations of statutes in your specific state. The statute of limitation date starts the day of or on the last payment made. This date, it's known as the FCRA date, which is also the Fair Credit Reporting Act date. FCRA is the Fair Credit Reporting Act. On a credit report, you have 7 years from the date of last payment to report the delinquent account to the debtor's credit report. I recommend to everybody to learn how to do credit reporting. I feel that not enough agencies take the time to learn how to put a charged off account onto a debtor's credit report. What I can tell you right now is I have fielded a whole mountain of incoming collection calls because debtors pulled their credit. They didn't know where their account was. They saw that not only was their account charged off and had a negative status with the original creditor, now they have one under the Bayview Solutions name listing Chase Manhattan as their original creditor. So now they're scratching their head thinking, wow, I'm getting dinged twice on my credit for this. Maybe I should go ahead and pay this off. So I absolutely believe in, and I recommend and I encourage everybody, take the time, do some credit reporting, and get your mark on the credit report. Just letting everyone know where their account is and where to pay it.